Welcome back to another trading week in September. This is your weekly market outlook for the 18th to the 22nd of September 2023. Let's get started with a quick recap of a pretty busy week last week. So we have the UK unemployment rate. This one picked up a little bit from 4.2% to 4.3%. We have the UK GDP dropping down significantly from 0.5% growth to negative 0.5% growth. This is below the consensus of negative 0.2%, so not looking too good for the UK there. We have the core inflation number, or the core CPI year on year from the US, dropping down from 4.7% to 4.3% as per consensus. In terms of the yearly CPI number, the headline inflation coming in at 3.7%. This is higher than what the market is expecting at 3.6%. So we have seen a gain from 3.2% to 3.7%. So in the past 2 months, we have seen a gain of about 0.7% with the inflation picking up in the US. Monthly growth there also picking up 0.2% to 0.3%. The core, that's for the core monthly growth. The CPI monthly growth goes from 0.2% to 0.6%. We have the ECB interest rate decision hiking by 25 basis points. That kind of disappoints the EURUSD a little bit because this information was leaked before it was actually released, so market has enough time to actually price in for a lot of stuff. And the comments coming out from the ECB during the press conference was more of a potential pause going forward from the ECB. We've got the US PPI numbers also picking up 0.4% to 0.7% growth. Retail sales month of month jump up from 0.5% to 0.6%. This is beating the consensus of expecting a drop to 0.2%. Other than that, we have the Chinese industrial production number looking very good, up from 3.7% to 4.5%, beating consensus at 3.9%. Retail sales from China also picking up very significantly, 2.5% to 4.6%, beating out the consensus of 3%. So that's a pretty busy week last week, and we're in for another busy week today. This week we've got pretty much all central bank weeks going on this week. We've got the RBA meeting minutes coming out tomorrow. In terms of the RBA meeting minutes, I think we are going to be looking at a prolonged pause coming out from the RBA, so that should be mentioned in the meeting minutes from the interest rate decision, which was on hold from the RBA. So we're expecting the meeting minutes to be a little bit more dovish tomorrow. And then we have the UK inflation numbers expecting to pick up from 6.8% to 7.1%. We've got the FOMC interest rate decision likely to be on hold, but really the focus would be on the FOMC economic projections. Really want to look at the dot plan that we have, the new dot plan that we have from the FOMC, whether or not there's going to be more room for interest rate hikes going forward, maybe in the next quarter. And then we have the Bank of England interest rate decision. This time around, market is expecting the Bank of England to hike by 25 basis points. But whether or not they are going to continue, we need to look out for that statement coming out from the Bank of England, which is going to be on Thursday. And then on Friday, we have the Japanese inflation numbers as well as the interest rate decision. Now, with the interest rate decision coming out from Japan, we're not expecting a lot at this point in time. We're not expecting that changes, but we do anticipate a little bit more of a potentially hawkish comments coming out from the Bank of Japan, especially from what Ueda has mentioned 2 weeks before. And then we have the UK retail sales number as well as the Germany flash manufacturing PMI number. Now, the flash manufacturing PMI number is definitely the one to watch out for, because we're definitely going to be looking for any potential improvements from the German manufacturing industry there, so we'll see what happens there. But UK retail sales number is expected to improve a little bit from negative 1.2% to 0.5%. All right, let's take a look at the technicals. This is for the dollar index. Right now we have established 104.50 as the floor for the dollar index. We have seen price bounces of 104.50, surpassing 105 right now. In terms of resistance, we're looking at 106 in terms of resistance for the dollar index. Going by how the US dollar has been picking up and how strong it is, I think we are going to be looking at a potential gain from the US dollar index here. Expectation right now for immediate support would be at 105 to 104.50, but we do anticipate further gains towards 106 on the dollar index. Aussie USD is up next. This one here again has created a new range. This is currently range bound. We've got the upper resistance range pretty much 65 to 65.25. Support wise, we've got 63.50 to about 63.75. That's the estimated support range for the Aussie USD. Looking at the current pricing, we are looking at around 64 cents at this point in time. So again, range is pretty much established here. We're looking at about 63.50 to about 65 cents as the barrier. We are kind of in between for the Aussie USD. This is pretty normal for the Aussie USD. We're expecting more of a range bound market condition to continue until tomorrow, when the RBA release their meeting minutes. We'll see how it is, but you know, there is a potentially higher chance of price breaking down below 63.50. But until that happens, we're not going to be picking any sides here. We're anticipating this to be in a little bit of a range bound market condition between 63.50 and 65 cents, and we do anticipate this range to be respected going forward until one of them is broken. Next up is the Euro USD. Very close call for the Euro USD here. We're picking up again from about May-June low there, which is at about 1.0650. 1.0650 is kind of the established support level. Right now we are kind of moving back inside the range there. We've got that range from 1.0650 to 1.0750. Sorry, 1.07. For as long as price is currently inside that green zone that we've marked here between 1.0650 1.07, it's best to kind of just stay on the sideline for the Euro USD until we manage to move back above 1.07 or price continues to break lower below 1.0650. If price continues to break lower below 10650, we do have estimated target on where it could lead to. We're anticipating a move towards 1.0550, which is the support 2 on the weekly pivot, as well as a 161.8% Fibonacci extension on the daily. For the pound USD, we established this as currently in a downtrend. We are anticipating price to continue to move lower, anticipating a move towards 1.2350 range. Again, this is around the May-June low for the pound USD. We're anticipating this level to hold strong for the pound USD. Again, that level is between 1.23 to 1.2350 range. This is where the support 1 on the weekly pivot is also located. If we break below 1.23, then we anticipate further drop on the pound USD. We've got support 2 at 1.2275 and below support 2 at 1.2275. We're anticipating a potential move towards support 3, which is closer to 1.2250 on the pound USD. In terms of immediate resistance for the pound USD, we're looking at the weekly pivot level, which is close to 1.2450. Beyond that, we have 1.25 and ultimately 1.2550 for the pound USD. Next up is the dollar Japanese yen. Dollar Japanese yen, we established that strong support from 145 to 146. This level has been tested last week. We saw price bounces off 146 on the dollar Japanese yen. Currently, this one here has an immediate resistance at 148. We're looking at a range between 147.25 to 148 to be more or less the range where the market is likely going to be traded in a sideways market condition. Any progress above 148, then we're looking for the dollar Japanese yen to pick up towards 149 and ultimately towards 150, which is the 161.8% Fibonacci extension on the daily time frame. In terms of support, we are looking at a very strong established support at 146 and 145 on the dollar Japanese yen. Dollar Canadian is up next. We've got a key level developing here. We've got support at 1.35 and price is very close to that support at this point in time. If 1.35 holds, then we anticipate a little bit of a bounce for dollar Canadian, first towards 1.3550 and then 1.36, but ultimately the cap would still be at 1.37 for the dollar Canadian. Should it lose 1.35, then we anticipate a move lower towards 1.3450 and then 1.34. Overall, I think we're looking at a little bit more of a compressed support zone for the dollar Canadian. So I think there's a lot more support building up for the dollar Canadian compared to resistance. In terms of range of resistance, we actually don't have a lot going on until about 1.37 from the current price. So, you know, going by the dollar strength, if it holds at 1.35, then yeah, we anticipate a little bit more of a stronger bounce coming up for the dollar Canadian. Dollar Swiss, this one here has been very strong, and you can see from the candles there throughout the month of September. The market has basically just been gapping up, and today as we start the week, it has actually gapped up again. It opened the market lower at 0.8950, and then it kind of pushes back up a little bit higher. Right now we do anticipate a little bit of resistance building up at about 90 cents for the dollar Swiss here. So 90 cents is definitely going to be the key level, but if you take a look at the distance between resistance 1 and resistance 2 is actually not that much. It's just about 30 pips. So yeah, resistance 1 0.9, 0.903, that would be the resistance 2, but ultimately we could potentially be looking at a further move towards 91 cents should price manage to take over 90 cents this week. In terms of support to the downside, we are looking at previous 78.6%, which is at 0.89. That would be the first immediate support for the dollar Swiss. Below that, we are looking at 0.8860 to 0.8850 range for support on the dollar Swiss. Lastly, we've got gold. This one here has been pretty predictable in terms of range. We've got 1940, 1950, the one that's highlighted red as the major resistance range for gold. At this point in time, we've got support at 1900. That's been holding on strong, and going by where it's currently going, we're looking at immediate resistance at 1930, potential move towards testing 1940, but really depends on what the FOMC is likely going to be doing this week. If the FOMC sounded a little bit more hawkish, then it's very easy for gold to actually drop down towards 1900 again. But if FOMC does mention about potentially pausing going forward into the future, or if the dot plan is a little bit more dovish, if they don't have a lot of projected interest rate increases going forward, then yeah, we do anticipate gold to test 1940 and 1950. And you know, if the FOMC does sound a little bit more dovish, there's a high chance it could actually break above 1950. So that's pretty much it for this week. It's going to be a jam-packed central bank week this week, so good luck to your trades and see you soon.